not in any commodity anywhere on earth, anytime. It can be a huge move, like we saw in the 1979, 1980 debacle. I mean, silver went just vertical for, you know, weeks, but it was weeks, not months, not years. And
Hmm.
so what will happen? Well, first of all, the market's got to clear in the real market, and that's the physical market.
Hmm.
And if the Chinese market is low on silver, and that's what's being reported almost everywhere, lots of buying, lots of upward pressure.
Right.
And but I thought about, what how this conversation might go. And so I want to kind of go back into history for a bit and talk about what happened during the Buffett purchase, okay? And that was in 1999. And at the time, Buffett was buying carefully, little at a time, accumulating, it's called. So he's accumulating silver. And then all of a sudden, there was this massive move, and Buffett basically came out, and I forget all the details, but he ended up buying 129.7, or we could round it up like everybody, to 130 million ounces of silver off the COMEX. And that is a huge amount relative to what the COMEX has. And what happened was about 90 million ounces were delivered, and 40 million ounces were not. They were delivered, let me say delivered immediately. 40 million ounces were delayed. Lease rates spiked up and stayed up until the 40 million ounces was delivered. It was all sent to London, and London started the SLV through JPM with 130 million ounces of silver. When that took place, they put a rule in that said you could only deliver 3,000 contracts. So 3 times 5 is 15. So whatever that is, 15 million ounces. That that didn't, I don't know when it stopped. It didn't last very long.
Hmm.
And so now there is a limit. So I want to fast forward to a posting on X. I forget who posted, I give him credit. And there's more than one like this. There's a few about Mr. X or Mr. Y or some entity, some institution, family office, take your pick. There is a big buyer out there, whether it's an individual, a conglomerate, even an industrial user. It doesn't really matter. There's someone
Right.
out there who's going to buy it. Okay.
After the Buffett event, exchanges implemented strict position limits to prevent another massive drain. Today, the CME rulebook caps any single trader to no more than 25% of the deliverable supply during a spot delivery month. Deliverable supply includes registered bars ready for immediate use, plus eligible bars in approved warehouses that can be converted with owner consent. Since these inventories rise and fall, the cap floats monthly. When total stocks shrink, the allowable position shrinks with them. This rule protects the exchange first, not the buyer, ensuring liquidity never disappears too quickly, regardless of global demand surges.
The CME protects itself. I mean, that club protects itself. So the rule I posted on X, and I've done it in very succinct form, at least I think so. So right now, according to the CME, in the spot delivery month, no trader may hold or control more than 25% of the CME estimated quote unquote deliverable supply of silver.
Hmm.
We all know that's one contract is 5,000 ounces. Deliverable supply is the registered amount, which is ready right now, can be bought by anyone, plus the deliverable eligible silver in CME approved warehouses. So that's a little touchy. Do we know? Well, we know it's all available for delivery. We also know that it has to have the medallion. In other words, the owner's got to sign a piece of paper, basically,
Hmm.
electronically or otherwise. It says, yeah, I want to put this up for sale. So that's interesting. But if you just look at the deliverable silver, I'll do it while we're talking. I'm sure you're going to make some comments. I prep for this interview, but let me get this warehouse stocks up there. The limit floats because the amount of silver that is on in those two categories, registered and eligible, floats.
Right.
So you just take that amount. If the warehouse supply shrinks, the allowable deliverable position shrinks with it. Obviously, if you have 150 million ounces in the registered category, you can take 25% of that, and then 25% of that does come off. Then the next month for delivery, you would have a lower number, obviously.
Mm-hmm.
So I think it was important to get that out there because a lot of information that isn't in alignment with what the CME facts are
Right.
might give people the idea that well, we've got them. We're asking for delivery of more silver than exists on the CME or whatever. So I give it back to you. Probably generated a few questions, and I'll look up the amounts that are available right.
Recent warehouse data shows that registered silver has dipped below 30 million ounces multiple times, raising concerns about a potential supply crunch. Each time stocks fell near critical levels, large inflows mysteriously appeared, restoring inventories to safer ranges. Total COMEX silver now sits above 450 million ounces, which seems comfortable historically, yet most metal remains in the eligible category, ownership uncertain and not guaranteed to enter circulation. A shrinking registered pool amplifies the impact of any large buyer. Even a billion-dollar purchase, around 20 million ounces at $50 silver, could dramatically tighten availability and destabilize the paper-to-physical balance.
The registered category is 138 million ounces. So if you multiply that by 0.25, you have your number. So 100 is 25, 40 is 10. So uh, 35 million ounces would be a round number, doing it in my head. Now, the eligible is 318 million ounces, but
Mm.
Ivan, we really don't know how much of that, people would want to move over. I'll discount it. I mean, in the extreme case, none of it's available. So we can
Right.
just go by the registers. So if you took the 35 million off the 138 million this month as the amount allowed, that leaves, I'll just round it down to 100 million. So now you got 25% of a lower number. 25% of 100 is easy. That's 25 million. So that would take it down to 75 million the next month. And we've been down under 30 million a few times. I've watched that. I've watched this not daily, but I do pay attention to it. And
Okay.
been under 30 million a few times. And I've always said, geez, that's not very much registered,
No, that's not a lot at all.
Someone could scoop that up and really cause some pain. And every time it got in there, it didn't last for very long. It stayed there, from the best of my memory, couple 3 weeks maybe, and then you see this big import of silver from somewhere, and the registered category moves back up 50, 80, 100, whatever. This last time it was under 30, and it stayed there for quite some time. And I thought, geez, this is looking like, possible squeeze situation.
Right.
And I will say it went for a couple months anyway. But then that day came, and all the silver came in. And of course, the amount of silver that's in the COMEX right now is actually pretty darn significant. We're up at 450 million ounces total,
Oh,
which
that's a
is
lot.
larger than the average. You can just look at Nick Laird's website, Gold Charts R Us, and you get a pretty good feel for it. In fact, I'll probably do that in next week's perspective. So coming full circle, if someone bought $1 billion worth of silver, that's about 20 million ounces at $50 silver. That's a significant whack. And you said someone bought, what did you tell me?
Well, there's on LinkedIn, and this is all speculation and
Right.
rumors, but someone they're confirming it now, but I guess some big player came in and purchased 100 million ounces or 100 million dollars worth of silver. I think it's 100 million ounces of silver, which is pretty crazy. I don't know if that's realistic, but they said that there's someone who's trying to, and they're taking delivery on it as well.
That's the one I'm referring to. And it may
Yeah.
be more than one person that's posting that or reposting that or taking it and posting it as their information. Who knows? I mean, the
Right.
web, you got to use some discernment. I mean, anyone can say anything. And the easiest thing to say is something negative about somebody.
Social platforms have amplified speculation about big players accumulating enormous quantities of silver. sometimes 100 million ounces or more. With anonymous sources and viral posts, it's difficult to distinguish fact from fiction, yet persistent rumors reflect widespread belief that deep-pocketed investors are positioning ahead of a structural supply squeeze. Some industry insiders report new patterns of physical delivery requests rather than cash settlement, which can stress the future system. In today's environment, even unconfirmed rumors influence sentiment. Digital chatter, reposted charts, and speculative claims can accelerate buying waves, creating self-reinforcing surges in volatility and investor emotion.
I could come out today and say, "Oh, Warren Buffett bought $1 billion worth of silver,"
Yeah.
and it could all just be, speculation and nobody knows. But David, where do you think we're going from here? Like, from now till the end of Christmas, it seems like it's moving up every day $1, or we're seeing massive price movements. Is it sustainable? I know a lot of people talk about nothing goes vertical forever. And if you look at the past, if you look at the data for silver prices from 1975 till now, you'll have, the 70s till 80s, a massive spike, and then it's down. You have like, in the financial crash around 2008, you had a massive spike and then down. Now again, it's happening again. But do you think it'll go back down again? Is it a possibility we'll see a massive correction? What are your thoughts?
Yeah, it's really tough. I mean, I do not like to see these vertical moves last too long because when they do, usually they exhaust. They go like a ball up in the air and then it hits equilibrium. It pauses a millisecond, zero, and then it starts coming back down faster or as fast as it went up. First thing we want to note is that this move today, maybe the last couple days, has to do with the rollover because the end of the month. So the professionals roll their contracts forward. So they move usually from like into the next main delivery month. And on the rollover, what they do is they take their position and they just sell it, or they they move it to the following delivery month. So from December to March, for example. Now, when that was done, it looks like the amount of interest went down. In other words, on their roll, usually if they've got 1,000 contracts and they roll them, they roll 1,000 over.
Hmm.
As an example, it's more than that, just using the numbers for the idea, not the amount. This time it was like 1,000 and rolling over 800. They got rid of, I'll just say 20%, although I have to check the numbers, but they offed a fair amount of their short positions that were not, that were losing money. So they're trying to mitigate their damage by buying back their shorts. And that's why you're seeing probably the last few days. So is it a short squeeze? Yeah, technically I'd say it is. Is it, sustainable? And the answer is not really. Not in any commodity, anywhere on earth, anytime. It can be a huge move like we saw in the 1979, 1980 debacle. I mean, silver went just vertical for, weeks, but it was weeks, not months, not years. And
Hmm.
so what will happen? Well, first of all, the market's got to clear in the real market, and that's the physical market.
Hmm.
And if the Chinese market is low on silver, and that's what's being reported almost everywhere.
Silver's recent rally, marked by rapid multi-dollar daily gains, resembles past explosive moves in 1979, 1980, and 2010 to 2011. Vertical climbs rarely last long because markets eventually exhaust buyers, much like a thrown ball stalling at its peak before falling back. Some of the latest spike stems from futures rollovers, short sellers closing losing positions, contributing to a temporary squeeze. However, true sustainability depends on physical demand, particularly from China, where inventories are reportedly low and new delivery hubs are emerging. Silver's unique challenge is that most supply comes as byproduct from giant base metal miners, whose priorities rarely center on silver availability.
And they're putting new facilities out in Hong Kong and Dubai. I'd have to look it up. You might help me there, Ivan. I think it's a couple places.
Hmm.
And it looks like the clearing integrity is going to be more out of the Chinese markets than it is at either London or the COMEX. CME arrangement. And that's kind of sad in a way. I mean, I'm for a free market anywhere it is. And, as the old adage goes, money goes where it's treated best. So if the silver market's treated the most fairly in a certain market based on the people that produce it, uh, then it's going to filter over to that area. The problem with silver, as we all know, is 70% comes out of base metal miners and the big boys at the top, the Rio Tintos, the BHPs,
Hmm.
some of these huge conglomerates really don't give a fig about silver. It's just a bookkeeping entry on their balance sheet. And so they are in bed with the bullion bankers. And basically give them their book and say, yeah, here's our silver. You guys do with it as you want. We'll
Right.
sell at this price. So that's a lion's share of the market, 70%. So that's kind of causes a question, I'll say, on who's in control of the fairest market. Do they care if it's at CME or London? No, they probably don't. They're probably basis London, I would, surmise, for almost all of it, at least at this time. So I'm just concerned to voice one more time, Ivan, are we going to see this big spike and no slowdown to, $65 per ounce, and then all of a sudden, it opens, 60 and then 55 within a couple of weeks, and we're, and we have or we gap up and then we have a island top or something and discourage. I really, lastly, puts a lot of pressure on me, or anybody. I mean, their own personal people, but I have people that follow my work, and so do others. I mean, we have so many. All the people that you interview. I mean, you got
Right.
Roth, Michael Oliver, you've got um, Vince, you've got all kinds of people that are following this market very closely, and people trust them. And I think for the most part, they all should be trusted. But do we get out on a spike or do we not? And I don't know the answer to that. I do think that if we could clear this market and we get some stability at a given price and the physical market meets the demand, then we could see some stability and kind of build off of that. It isn't looking like that at this point in time, but this market could fool anybody, including yours truly. And I've followed as long as probably almost anyone.
The key question is whether today's rally will repeat history, surging sharply, then retracing just as violently. Silver often forms dramatic tops, frustrating long-term holders and analysts alike. A stable price foundation requires the physical market to meet ongoing demand at higher levels. If shortages persist, or new buyers demand delivery instead of paper exposure, volatility could intensify. Analysts tracking global flows note that China's expanding role may shift pricing power eastward, challenging Western exchanges. While no one can time the next peak, it's clear the market is in transition. Silver's long-term trajectory depends on physical clearing, not speculation.